Hello. Welcome to another video, another stream of videos futures trading. Um, I'm doing what I'm going to do now. I'm going to do a replay of what happened yesterday because it has a lot to do with what's happening today. I am sorry, I am still not constant in my streams. I was very busy these days. Before going there, let's just look at this market. There was a trade here. The same trade that we had yesterday is the same trade that we're having today as well. Before going over there, let's do a quick replay of yesterday. This is yesterday before the opening. Uh, this is the overnight inventory from yesterday. Settle is it's around this time. It doesn't matter where exactly it is, right? But for practical purposes only, it is. Let's do it here. Oh, come on! It is here. It is here, and after that, my bad. This is settle is here. High over there. This is settle, which was the same. Yeah, this is a mechanical low. This is a weak low from yesterday. This one, which coincides with the overnight low here. We have a, well, I don't know where the market is, but this is distributions close here, overnight distribution close, overnight high up here, overnight POC, and overnight high back. These are some practical references. Okay, let's see where the market is at this moment. Okay, the market's up here. Why I'm interested in this moment in time is if the market is going to close this gap because we have an upside spike. If the market is going to close this distribution, okay. Now market's open. Come on. You need to load here. Come on, load. I'm going to put this one in once because it's. Where's the overnight? Oh, here. Okay. So far, nothing here. Okay. I'm going to do full speed here. No, a little bit faster here. 20. Okay. So far, there's nothing here. What's happening here? The market open. We have a gap. Go with the gap. Everything was pointing or signaling to the upside here. Everything. Everything was signaling to the upside. We have a gap. We have a spike from the previous day, which base is this. This is base of the spike. As long as the market trades above the spike, it is positive. The market remains to the upside. The momentum is to the upside as long as the market doesn't take this base of the spike. To take the base, first the market needs to close the gap. Okay, and look where this market is right now. Huh? Now the thing here is that I have at this moment I have two contracts here. I have we have now the market has excess in the upper side, which was good. Okay, so far there's not I have not trade here yet. I hate when this happens. You know? This period should be all the way down to here. It's just taking too much. What happens is I have too many charts open. Notice where this market came down to. Holy fucking. This is very important. This is very important here. Man, I can. This is unfortunate. I cannot see it here. But there was, there was a, the trade was actually when I think the market came down to exactly this level here. And it was bought from halfback, overnight halfback, boom, you got it. There. And then there's a rally here. Then the rally comes. This is the second pill. This is a weak level here. It stops right here. Um, and the trade was to take that halfback. This is so unfortunate here. Yeah, but the market did one thing at the opening, and then it left a clear sign there. That the market was doing some just this was just a counter action. The market was at this moment in time. Oh, come on. At this moment, the market was very long. Okay, market had a spike in the overnight, and the market was super low. Was super low. It left a weak low, and a very mechanical low. And the trade was that. That was the only trade that I saw yesterday, taking the mechanical low. And after that, there were good signs, good odds that we were going to have a rotational market. Rotational market means market going to the downside, then going to the upside. But the thing here is that the market has two set of references. All right, this is the contract that is expiring, the EM, and this is the contract that is that's replacing the old one, the U. Right, and the references in the in the in the in oh come on, the reference in the old one. In the new one, for example, is the 40, we have a 4400 here. Where's the 4400 in the old one? The 4400 is way up here. Just notice how far we are from the 4400. We still have some to go. We are like 15 or 12 points away. 12 points away from this is 40, 44, 40 up here. All right. And come on, where it went? That's the difficult thing here. You know, once a reference is clear in this contract, there's another one on the 44 on the 44 on the new one. Now, I say that was going to that what happened yesterday has a lot to do with when it's happening today, because yesterday we had really good, not really good, but better volume than the previous days, which you can see here. Volume is higher. I know it is very obvious that it's higher here, but there's the direction of the market is not clear. It's not clear, right? If any, you can see, right? You can see here a break here, then a rally, then a break, another rally, another break, another rally. Definition of a rotational market. Very early, the one time the trend to the downside cannot be, I mean, it's broken, was broken here. See, then the next couple periods up later, once the high is taken, the market again breaks the trend, the upside trend, and that's the rotational market. And what happened today? We have FOMC, we have PPI 830. I hope you haven't seen that. We have now you can see. Look at the volume. What is the volume of this market? Right? Look at the volume. The difference with yesterday. Yesterday was high and now it's very low. So traders are waiting. Traders are waiting for FOMC. And in particular, the, the press conference of Chairman Powell, I believe. Right? That's my belief. Now today we have we had again inventory that is in this case I would say it was kind of a little bit. You can see that there is a accumulation above seller, which is long, but there is also huge, a good amount of inventory, very wide POC that is below seller. Kind of like a balance inventory. There's good amount of shorts, good amount of longs here in this market. And at the opening, the thing that happened, the market has a small rally here, and it was sold exactly again. It was sold exactly this time. Wasn't bought. It was sold exactly from halfback from this level. I mean, that's not a good sign for a seller, right? To be a seller coming. Well, it tells you who's doing the sale. And now, this environment, what is happening right now, it has all the sign, all it checks everything, or it checks all the boxes, of a short calling movement. Just look at this. Look at what's happening here. We have a breakout. We have a breakout in the monthly. This is a huge range, 13 months, more than a year that the market was trading in a range, and now we have a breakout. What a breakout here! It's really clear breakout here, clean breakout to the upside in the monthly. This is a squeezing. No, it's not a squeezing the monthly time frames, time frame money, but the under investment invested money. The weekly, same thing here. We got this reference here range. We can see a little bit more here. We have a range, and notice what's happening here. What happened before, right? Rally, break, rally, break, rally, break, right? Traders do what works until it doesn't work anymore. What I it seems like there was there was a lot of money here, a lot of trading, expecting, just for the market to come to this. Just just try to picture this. What do you have here, right? A trend, right? A trend line. Just move it upwards. This is a trend line here. Or you can do it here as well. Whatever. Yeah? You can move this one up here. This fits perfect there. You can trace a line there. Um, and the next thing, this one was market coming back to this, but it didn't. Right? Instead of that, the market is doing a breakout on all the shorts that were here, positioned for that movement, are not being squeezed to the upside. Now this is a short squeeze. Yeah. And look at the craziness. Look at the impact that this one is having. Look how high this man has how crazy this movement is now. Can you see? Can you see it here? This is a gap here. This is not a gap. This is just a change of contracts that is uh, because this is a continuous chart. It doesn't reflect the change of contracts here. They just put one contract on top of another one, so you can see a continuous chart here. But this is a short squeeze. This this looked like a short covering. You know, this looked like a short covering here. You know, and what was happening in the previous contract was that we have these huge rallies or huge breaks, and then just before the contract ends, you know, when the rollover, before the rollover, there was a really significant movement in the opposite direction. You know, squishing the naked option sellers. That was happening in all. It happened here. It happened here. And, this is the ones I remember. It was clear that that possibility and it seems like now, you know, there was a lot of again, same thing, right? But breaking the pattern here. You know, traders were used to something, and now they are being, you know, cut underwater. They were caught with pants down here. And this is a short squeeze in progress here. If you go back and check how this movement is happening. Now we have just seen how this happening, how this is happening. Just be careful here. Um, what I'm trying to say is, got to be there is a tremendous amount of weakness in, I guess, many people. We say that I keep saying the same thing, right? But that is what I do. What I do is I keep an eye. I don't care about the long term market. The market, this can be a strong market. We can be in the bull market or whatever, right? But I don't care about that. I am aware what's happening, but I don't trade the monthly. I don't trade the weekly. I don't trade the daily. My market or my trading happens in the intraday, in this time frame, where the inventories has a lot to do. You know, our market has a lot to do. What I do has a lot to do with inventories, with market inventory getting too long or getting too short. You know, when the odds favor the upside, odds favor the downside. That's what I'm trying to see. Trying to find, you know, a place where my position can have, you know, the better odds, minimizing the risk. There was one trade here. Yesterday, there was only one trade. And after that, there was all crazy. And it was a counter trend, right? It was a counter trend, a counter trade, a trade against the trend. Just because uh, something happened in the lower side that was very mechanical, and the trade was that, just taking that, and after that, boom, the trade's over. Same thing here. Today, everything, not everything, right? We still have a market to the upside. We have just saw that we have a market. You have to do your homework to identify that, right? We have a market to the upside. This is a range market having a breakout to the upside, breakout in the daily, weekly, monthly, all time frames. Now now there was a weekly that was that had uh, kind of like good participation could be identified. The weekly time frame was more organized, was more orderly conducted, and now you can see the monthly as well. You can see the bigger time frames moving, bigger time frames in action here. Right? So there could be something going on here. Now, I'm not saying this market is going to take this high. I'm not saying that. So, but I'm saying that seems something here. right? The market has take this high out. Now, is this a look above and fail? Look above and fail would mean could mean um, that the market comes back inside this range, fails, comes back inside the range, and once the market comes back inside the range, watch out, the destination could be the opposite side of the or opposite side of the range. But it takes months. Okay, it takes months to develop. This is a trade that has already finished. Remember when we were in this range here, there was a shorter range. The market looked below and it started to develop. It failed. It didn't have downside continuation. What's the ultimate destination trade? The opposite side of the range. The market has reached the opposite side of the range. Nothing else. I'm not saying nothing. I'm not saying the market is going to break here and come back down to here. I'm not saying that. Right? But this trade here, the weekly, is very mechanical here. It's very mechanical. The daily shows a lots of weakness on the lower side. This is crazy. Not up here, market coming up here. You know, a really good thing here would have been, well, okay, you gotta break out here, right? We break out of this range. Come on, let's go, come down here, maybe closing this gap, and then go higher. That would have been a better movement. That could be better for the market as well, for the whole market. But that's not happening. This market is long and is hyperextending to the upside. Just be careful here. When you are long, be careful with your positions. I think any piece of news can trigger a sell-off here. Um, I still have these weak references. I have this four low here, firecracker potential here. But this contract, all the longs that are in this contract that are super weak, you know, they all started. Where is the 10? They all started here. They all started here. This is the May 10, May June, no, April 10. April is this one? Come on, what is this? I guess it was this one. When I started, I don't know, man. Was somewhere in here. I forgot completely what it was. But all of these loans from the current contract, from this contract here, from this contract, the week are about to pull something good. If this market doesn't take if this market doesn't break, they are going to be just fine. And what may happen is, they are confident now to the upside. They're gaining confidence, but there's a tremendous amount of weakness here. It is shown here. But this contract, once this contract closes, which is next week, boom, everything is out of the window. Everything goes out of the window, and a new contract starts. This contract, the current contract, started to have volume here, 612. It started to gain a lot of volume there. And what is that? Just check this out. Check this out. Check this out. This is the encoder. Where is here? Just check this out. Okay, Tuesday. June contract 1 million. Now September has double the amount. Monday, almost double. Friday, half. Okay. I think I guess even Friday I can consider. Yeah, Friday. Friday would be the 9. Right? Not this one, but this one. This day up here. Okay. That's what the new contract is. Now, Now the markets are these markets are trading in range. There were the crude, I mean oil, dollar. They were trading in range. Bonds keep trading in range. Gold is complete craziness here. You know, this is short covering, long liquidation, short covering, long liquidation, short covering, long liquidation, short cover, and you have a big range here. Notice how this is. It has a low here, matching these lows, and there's tremendous amount of buying around these levels here. You know, this is weak buying. You know, this market has good odds coming down to here to this level, but those ones are just odds. Remember that, just odds. Um, the danger, I believe, still remains in the bond market. There's a lot of buying in the bonds that's going on. Lots of buying here. Well, but what matters to me is what is happening in the new contract. And this week has historically has given me a good deals of each of problems because maybe I try to look too much. I try to get too much information here. Uh, and I use, for example, just check this one. Now we have a good high. We have a good high in this contract, but look at that. Look at here. There's no excess here on the upper side. So this market can still go high. And these references are way from. I don't know why this is not valid here. I see it looks like the market has seen the 4400 here. These traders have seen the 4400. Okay, these ones have no idea that the 4400 is up here. They see the traders are the market is the 4400 is down here. Now, in the same way, how the market was, having great deals, you know, great deals, but taking the 4300 here. Okay, was trading good here, having selling for the 4300. When this happened, when the breakout happened, look what it is. What is here? What is the 4300? Way back here. The market already made a breakout. Two of the 43 out of the 4300. All right. So this will be support in the old contract, but 4300 has nothing. It's nothing here. The support is 43, 46, which was August high. But this August here is the contract, belongs to the contract that expired 4 contracts ago, like I would say 9 months ago. So it is not, it is not, it doesn't have any relevance, right? Because there are no shorts, no longs from this time in the market, in the ES market, right? In the S&P, in the ES, in the futures. There could be, I don't know how the SPY works. It could be a SPY. It is a SPY contracts. I don't know. I think it's constant, right? The SPY is equity. And there could be from back then. There could be. So you can see how different is trading futures from trading stocks, right? You have to pay attention to a lot of different things here. You have to pay attention to, you know, um, because it's a contract that expires. It has only 3 months, and some good things or bad things can happen here. You know, depending on which direction you are positioned. Now, going to the market, to the present market, we have a gap high here, 4,400 here. If any, and yesterday something to you know this trade yesterday. Now we were talking about this trade to the downside. You know, you have to realize that how the relevance of two contracts here is the downside trade. You know, here was looking to close the gap. But if there's anything that's going to happen, if my trade is going to have any kind of problems, it usually happens around these round numbers. So when the market came down to here, as I said, if that's it, right? This is it, right? This is it. There's no more here. There could be something. If there's going to be something here, uh, more likely the market is going to trade back and forth around the 40. There's going to be a lot of buyers, a lot of sellers, a lot around this number. I know. And why you would like to be short here? The market is going higher. It is extremely weak. We have very emotional market. One, two, three distributions. Trading sideways here. What is this again? This is another P formation here with high volume actually. This day has high volume. This day has volume. And notice if you take this low, I remember gaps are a form of excess as well. Um, this is the stem of the P, and this is the P, the loop of the P. It's not that wide though, right? It's not, but resembles a P here. So I got to be very careful here if I am thinking to go long. This market can crumble really fast here. Just be careful. Now, first sign of weakness here. Notice where the buying is coming from. This high is not good, right? But here is good. The low is kind of, you could say it's being bought from previous day high. Checking the previous day is being bought from the previous day high. Now, what do we have? Do we have the same weak levels from yesterday? I got this one here. I guess it's from the, I don't know why I have this. It was overnight high, something like that. I have this one here. Notice how, uh, I mean, this is good here, but what happened here? Oh, halfback. L was bought from halfback, exactly from halfback to a tick, and M pretty much the same. So tremendous amount. You can see who is doing this trade, you know. And now, remember, having a good reading in the market doesn't mean you're going to have a good trade. You can see the weakness in the market. It doesn't mean I'm going to go short. Momentum is something really powerful that we have to learn to deal with. And you don't find momentum. The value is higher, for example. Value is higher. The market is going to the upside. Is one time frame higher. So why you would like to fight this? And you have seen how 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 shorts when are being squeezed here in this market. This is a short squeeze going on in the bigger time frame. So be careful. Yeah, you don't want to be squeezed up. You don't want to. You don't want to be part of the squeeze. Okay. All right. I guess that's what I wanted to point out. I mean, what happened yesterday to the downside now is happening to the upside. It happened to the upside. We have a mechanical high. Odds are, well, the market will come back to take this high. The weak high was here, and notice how previous day high was right there as well, and market just took that high out. There was stops here. It took also the overnight high out. And what's after that? What's after this? What do we have? Nothing, right? If the old side here, the market, the market's to the upside, okay, but it needs volume here, new volume, not just shorts being squeezed, not just short covering here, not just short, because it needs new volume to keep going higher. Now, what is the volume? There's no here. Volume is decreasing actually. You know how much here? Maybe 20%, something like that. Yeah, exactly 20%. It was This was 17% here, and now 20% here. This is about the last period is about close to be 20% has to be, yeah, kind of like if it crosses around this level is going to remain like 20%. So that's very low volume here. No volume in this market. Now let's check if there is something here. Do you see any tanks? I don't see any tanks here. No tanks whatsoever. There was one yesterday, you know. There was one yesterday around this area here. We were talking about this. Oh, look at this. This is 45 here. God damn. Ah, I just saw this. No. It looked like 45, but it's not. The other observation that I have from yesterday is POC move, could not be, could not be moved higher. POC in the low, it never moved to the downside. If to the upper side, if anything, could this be a 45 to the upside? Market moving higher, being pulled back, higher, being pulled back. No, this is not. I am making up. There's nothing here. There are just no X's in the upper side. No X's in the upper side. There's an indication that the action to the upside has not ended yet. Now there's still more to the upside. We have X's now, but the old one doesn't now. June contract doesn't have. September has X's, right? Um, I guess now it is just traders waiting for FMC. Yeah. I will see what can. I will see. I will come back at 2 p.m. today to stream FMC. But the most important thing I believe could happen could be 2:30. I know the press conference of Chairman Powell. All right, guys. I hope you got a good rest of the day. Have a wonderful trading day. Stay safe. Bye bye.